Hi everyone, my name is Chelsea England Mendez and I specialize in federal and state research and development tax credit studies. Today I would like to provide you a brief overview of what the R&D credit is and what does and does not qualify. So the R&D credit is really just a nifty little credit to get you guys some money back on your tax return. And in order for a project to qualify for the R&D credit, it must meet the following four-part test. Now, every project or business component must meet this test individually. So the first test is a permitted purpose. So you are designing and developing a new or improved product or process. So you're working to design and develop that new product to improve the functionality, the overall performance, the reliability, or the quality. Now, this is something that if somebody else in the industry is already designing and developing a product like this, that doesn't matter. As long as it is new to your company, you guys have never done this before, it would still meet that permitted purpose test. Number two is that the project has to be technological in nature. So you're not relying on the soft sciences, you are actually relying on those hard sciences. So physical or biological sciences, engineering, computer sciences, things like that. You're not just changing the aesthetics of something. And then the third and the fourth part go hand in hand. The third part is that there must be a technological uncertainty. So at the start of your project, you may know what your end result, what you want it to be, but you don't really know how to get there. So you go through this process of experimentation where you're evaluating maybe different code strings or different components if you're building a hardware piece, or just different software applications that maybe you need to integrate and get them to talk to each other. You're going through that process of experimentation to figure out what would work best and ultimately get to your end result. So those are the four parts that a project and business component must meet in order to qualify for the credit. Now, these projects and business components, if you are doing them for a customer, they must be done on a firm fixed price contract with your customer. That means that your company remains at risk. If you're doing it on a time and material basis for your customer, you're not at risk, and so we wouldn't be able to qualify that project for the R&D credit. Now, you can also be doing internal development as well, where you are designing and developing a new product that you want to take to market. That's your internal product that you're developing. That'll still qualify as well. And then there are four buckets of qualified expenditures that qualify for the credit that we would want to calculate. Number one, and usually the biggest bucket, is going to be wages. So wages are calculated by using the Box 1 W-2 wage amount by employee. And we will do that by getting an estimated percentage from you guys as to how much time those individuals spent doing R&D related activities. And time that qualifies is going to be when you are directly doing the activity. A lot of time, maybe if you're a software engineer, the engineering department, those are really going to be, doing the R&D activities. And then you have a step above that, which is the supervisory experience. And a lot of times, for example, the VP of engineering is going to be acting in that supervisor role as well as actively doing them. They're going to be communicating with those engineers. They're going to be getting those one-on-ones and supervising those overall activities. And then it goes a step below for supporting the R&D activities. So, for example, maybe you have a software engineer or a developer that wants a product tested, or you're building a component and, pulled in an assembler to actually physically build that component for them. That's going to be in that supporting role. And then the next section is going to be supply costs. So supply costs are defined by the IRS as any tangible asset that is consumed during the R&D process. So this is not going to be subscription costs, licensing fees, or like equipment purchases, as those are depreciable. This is going to be if you have you're building a robot or something, you have a component or something that's going into that and that you are consuming during that process, that physical item. And then the third part is if you are a software company, you are most likely going to be having these lease computing costs. You're not really going to have supply costs. Now, lease computing costs are going to be examples like AWS, Azure, or Google Cloud, where you're doing that new development work and storing it in the cloud. Now, if you have a production environment as well, we will have to carve out the costs associated with the cloud that is related to that production environment. And we can simply do that just by getting an estimated percentages from you guys to determine, how much time is actually related to the new development work. And that's the part that we would want to qualify. And then the fourth part here is consultant costs. So consultant costs are when you essentially hire a third-party consultant to do the R&D work for you. So if you're a software company, maybe you don't have the capabilities to, fully write the code in-house. So you hire a third-party consultant to do that R&D work for you. As long as you are paying that consultant on a time and materials basis, meaning you're still at risk for the work that they're performing, and you retain the rights to the work, then that could potentially qualify as an R&D cost. Now, if you send a new product out to be UL tested, brand new product, that could also qualify as well. Now, if you do any contractors that are overseas, that is not going to qualify because all work must be done in the US. So while these are the buckets that qualify for the credit, there are also numerous sections and costs that don't qualify for the credit. So if you are just changing the aesthetics of something or doing, those seasonal design factors, those aren't going to qualify. If you already have a product that's in production, that's not going to qualify as well. Once a product hits production, that's usually when the R&D stops. Now, that is not to say that if you get feedback from a client or a customer and it comes back like, okay, this isn't exactly what we thought it would be, and there's actually a lot more problems, and maybe they want a bunch of new features, different designs like that, and you actually have to go back to the drawing board, your R&D process starts back up for that product. Now, if you are doing anything like reverse engineering, surveys, those soft sciences like the social sciences, arts, or humanities, those are not going to qualify for the credit either. Another thing to keep in mind is also grant costs. If you receive a grant from, the government to do this project, we will have to, carve that grant cost out. So just something to keep in mind while you're kind of thinking about these activities. And I hope this will kind of make filling out that QRE expenditure sheet a little bit easier. If you guys have any questions whatsoever, please don't hesitate to reach out. We're happy to jump on a call, walk through all of these costs with you, determine what does and does not qualify, and go from there. So if you guys have any questions, don't hesitate to reach out, and we look forward to working with you. Thank you.